The candidates for November are set.
I know Donald Trump's type.
Between now and Election Day,
we are not going back.
A campaign season unfolding faster.
Kamala Harris is not getting a promotion
Than any in recent history.
Make America great again.
Follow it all with new episodes every weekday on the NPR Politics Podcast.
Are you enjoying this podcast? Well, you have KUOW members to thank for that. KUOW members make the trusted local journalism and storytelling you hear on this show possible. Become a member today and help support the production of this podcast. It only takes a minute. Make a donation at KUOW.org or follow the link in the show notes. And thanks.
This is Soundside. I'm Libby Denkman. All right, let's talk shopping and Nordstrom. In this case, shopping for Nordstrom. Last March, it was reported that the Nordstrom family was interested in once again trying to take their storied retail company private. There hadn't been much word until last week when we finally heard a price proposal, $23 a share. Another bid by the Nordstrom family was rejected 6 years ago. So why try again now? And what is the future of this iconic Seattle brand? Here to discuss is Seattle Times business reporter Alex Halverson. Hey, Alex, thanks for being here.
Thanks for having me.
So let's start with the basics. What is the Nordstrom family proposing for this deal?
Yeah, basically, so Nordstrom is a public company, which means even though the Nordstrom family has leadership in the company, they don't own it. They own shares of it. A lot of the family owns shares in it, but it's publicly traded. So shareholders have a collective ownership of it. They want ownership of it now. So basically they want to take the company private, they have financial backing for it, and they'll own a majority of the company if this approval were to go through.
This offer is significantly lower than what the family offered in 2018. So this offers $23 a share. That was $50 a share? I mean, what changed? And does the new price offering say anything about the value of the company?
Yeah, and maybe about the value of the physical, brick and mortar retail industry in general. It's about half the share price. And if you look at their stock price has fallen by about half that since the last offer. And that's just really reflective of the industry. When you look at these publicly traded companies and what they're reporting, annually in their public earnings, their revenue is about half of what it was, from 2018, 2019 pre-pandemic. Their profit is about half, sometimes much lower. Sometimes they're reporting losses each quarter or each year. So it's really reflective not only of Nordstrom, but of the broader retail industry.
Why would the family want to take the company private again? Is it just about control?
Yeah, and there's just a lot of things you can do as a public company, right? You don't have the prying eyes of Wall Street every 3 months. So, public companies have to report basically their financial health every 3 months. And those 3 months come up quick. So when you're trying to revive a brand, trying to turn things around, even if you're not totally struggling as a company, you've got 3 months and you have to show shareholders growth. You have to make good on the forecast you made at the beginning of the year. So if you're trying a long-term plan of either brand revival or company revival, Wall Street doesn't look favorably as much on longer-term revivals. They want quick fixes. They want, the stock price to rise within those 3 months. Every 3 months, they want to see results.
Yeah. And this family company, which again has been in the family for generations, Seattle-based company, they would be looking at maybe an investment in rebuilding at a slower pace without the prying eyes of Wall Street. There's benefit to that. How would the Nordstroms pay for this deal? Where's the funding coming from?
Yeah, so it's coming from a mix of things. It's cash, it's equity that they have in the company, so shares of the company that their family already has. It's a financial backing from a bank, $250 million. And there's also a Mexican department store chain that is putting up a little over $1 billion for the deal. And then they would own a little bit less than half of the company.
So say I hold shares in Nordstrom right now and the deal goes through, what happens then?
That's a good question. Basically, your shares would get bought out, I think. You wouldn't be able to invest in Nordstrom anymore like you could any other publicly traded company.
Let's talk about that retail industry as a whole. I mean, Nordstrom isn't the only brick and mortar retailer that investors have tried to take private. Macy's has rejected multiple offers from investors this year. Is this a bigger trend? Are we seeing a lot of retail, brick and mortar retail, looking to take themselves private?
looking to take themselves private and overall just struggling in general, which makes you ripe for buyouts, makes you ripe for mergers and acquisitions of just trying to take yourself private, right? And the trend was kind of starting in the 2010s, physical retail as the rise of e-commerce was starting to decline. But there's really a line we see with 2020, the pandemic.
Yeah.
Macy's, Nordstrom, they saw their annual profit really go down. Sometimes it was halved. They saw their annual revenue go down. And at the same time, a company like Amazon, their profit doubled in 2020 as more people shopped online, as more people went to these e-commerce venues. And now there's just more e-commerce competitors. Walmart is making a big push. Target has made a big push. Even TikTok has said, e-commerce is going to be our next big thing. So these physical retail giants, the Macy's, the Nordstroms, yeah, they're still profitable year to year. But something like Nordstrom, their annual profit in 2019 was $496 million. Last year was $134 million. And it's kind of been fluctuating around that since 2020. Same thing with Macy's. 2018, they reported over $1 billion in profit. And last year, they reported $105 million in profit. And you're seeing that in their decisions as they go forward. They're trying to save money. They're closing down stores. Macy's announced either earlier this year or last year that they were going to close dozens of stores across the country. Nordstrom last year closed some stores across the country. So when these companies are in this cost-cutting mode, they're looking for money, and that makes you available for a buyout or a merger or, taking yourself private. Nordstrom is a little bit unique because the family still has a lot of leadership. They've got a lot of equity in it, thanks to being such a big family that legacy has continued down. So a buyout of Nordstrom looks a little different than Macy's, but I think the symptoms are kind of the same.
What about the discount retailer, though? The Nordstrom Rack brand has grown, right? That's a bright spot.
Yeah, it's done really well from them. And it kind of shows how they can be different than like a Macy's that's closing a bunch of stores, whereas Nordstrom Rack, it performed really well in their latest quarterly earnings. They opened 11 stores across the country this year, Nordstrom Rack stores, that is. And they're planning to open another 21 by the end of 2025.
It's kind of like how the dollar stores and the discount retailers as a whole have been that slice of good news for brick and mortar, right?
Yeah, they're meeting customers who are looking for a discount, and whether that's customers that are fighting inflation or, fighting the cost of rising goods, who knows? But they're seeing that customers are responding really well to cheaper goods. I believe it was the chief financial officer in their latest earnings report said that at Nordstrom Rack stores, sales across all income levels. So everybody is spending more at Nordstrom Rack, whereas a standard Nordstrom, they're really only seeing a moderate sales growth among high income earners.
All right. Our last couple seconds here. Alex Halverson of the Seattle Times. Handicap what's going to happen here. Do you think the board will actually take this deal?
I don't know. I mean, they rightly rejected it last time, and even called the offer inadequate. Well, the offer is much smaller now. So, I mean, they might still think it's inadequate. I don't know. It seems like they're taking it pretty seriously. They've tapped financial advisors, legal advisors from pretty big financial and legal firms. But the board said in its statement that it's under no obligation to, pursue this offer or even come up with an alternative. So they could just come out and say, no, we're rejecting this offer. And then Nordstrom just does business as usual.
Yeah. Seattle Times business reporter Alex Halverson, thanks so much.
Yeah, thank you.
Thanks for listening to Soundside. And hey, this show is only possible because listeners support us. If you are able to give right now, check out the show notes for a link to donate. And don't forget, you can listen live on KUOW 94.9 FM Seattle at noon and 8 p.m., Monday through Thursday, or anytime online at KUOW.org. This is Soundside.
Hearing static when you enter a tunnel in the middle of a fascinating story? Hanging out in your driveway to catch the end of a report? We've been there. With the KUOW app, you can listen to your favorite programs anytime and anywhere. No driveways required. Let's get going. Download the KUOW app now, available for iOS and Android.